Good afternoon. Today is Thursday, May 25th. Right now, time in Singapore is 5 minutes past noon. And let's do a bit of recap. As far as the US debt ceiling negotiation goes, nothing has been reported to have been achieved. So what happened is the US equity market reacted accordingly by sliding down. Now that the Dow Jones has taken out the May low so far, although May is not technically over yet, but we can see that at the beginning of the month itself, the May low was at 32,937.5, and this morning, overnight, we can see that the market has gone below this level to as low as 32,752.4. So it is creating a new low for the month, and how it will end will be crucial as to what will happen in the month of June. And because Monday is Memorial Day holiday, the market is going to be closed on Monday, and tomorrow night will be half a day, especially for bond traders. So the market is likely to be very, very illiquid. So that increases the danger and the risk. So if you can afford not to hold position over this weekend and the next weekend until we have a resolution on the debt ceiling negotiation, try not to hold position over the weekend. So this is something that you want to take notice of, okay, because the risk is proportionally actually large. Okay, so what you can see here is that the market at this current rate is probably unfolding in a larger three-wave degree, targeting 32,450 to as low as 32,140. So between these two price range, market may may actually find a technical support. Okay, so do watch out for that possibility here. Over in the S&P 500, we also see the continuation of the pullback from 4,212.8, and just know that this is the year high. 4,212.8 is the year high, and the market is now pulling back, and it has hit a pocket of prices which I think possibly may hold this market technically speaking, and that level is 4,090 to 4,116. And last night low, we have saw a low been achieved at the 4,104 level. So basically it has already hit its pocket, and next will be how the market will react. Will the market bounce from here, or will the market go down and take out the April low at 4,048? And if that's the case, that will bring a totally negative connotation to this entire outlook here. So do watch out for 4,048.3, okay, which is the year low so far. Now, not the year low, sorry, this is the April low, okay. So the Nasdaq have a bit of pullback from the all-time for the year's high at just under 14,000 and 13,893.7, and it has actually hit a pocket of prices that may actually hold this market, and that level is 13,446 to 13,617. And if this market breaks below 13,446, the next bracket of prices that may actually hold the last line of defense, in my opinion, is 13,300. So that level should not fall below these prices. If it does, then the market will be opening up itself for a challenge of the April low at 12,724. Okay, so do watch out. Upside potential is getting to be very limited. If we have a rally from here, I suspect the prices will actually challenge the 14,135 to 14,710 thereabout. Okay, do watch out for that possibility here. Over in Asia, we can see a practical meltdown in Hong Kong equity prices. Prices in the Hang Seng Index has already taken out the year low, which is the March low at 18,829 to as low as 18,713.7 this morning, and it does not look good because the prices continue to edge lower. Let's take a look at the higher time frame, which is the daily time frame, and from here you can see that the possibility of an extended decline all the way to test the 17,000 is very, very real, because there's nothing in between until this November low here. The last November low is at 16,833. So if this level cannot hold, and this level is within this bracket of prices here between 16,000 to 17,000. So if this level cannot hold, then something more insidious is happening to the Hong Kong equity markets. However, in Japan itself, we can see that the Nikkei has rallied to a post 1990 high. Technically, it's not exactly 1990, but it's August 1990 high at 31,352, and you can see there's a bit of a pullback yesterday, and today we see a bit of a rebound. Whether it will amount to much remains to be seen, but this price at 31,352 is very, very close to my target range price at 31,600. So upside really is quite limited in my opinion, and the downside risk is actually quite real. Okay, to be watch out for that. And then in the Chinese market, we can see that it is mimicking what we are seeing in Hong Kong. Prices are continuing to track lower. This is the year low so far, and we're beginning to see prices possibly challenging the last December low, which is at 3,805. And if this level breaks, then we are seeing the continuation of a larger move. Let's see the weekly time frame. This market is definitely going to go much lower. You can see the market actually started to decline from just under 6,000 points, and the last level in which it must hold is somewhere between 3,500 around here, 3,500 to, yeah, it's around here. If this 3,500 fails to hold, then all hell will break loose. Okay, so the market is looking for quite a serious downturn over in the Chinese equity market, as far as we can see. Now over in the energy markets for WTI, we can see that prices continue to edge high to $74.69 overnight, very close to the May high so far at $76.07. Although technically May is not over yet. Let's see how it will close for the month of May. By the end of May, hopefully the price is above $76.07, and that will lay the groundwork for a further extension into the $80 per barrel range to possibly as high as $83.50. Okay, so this is looking to be quite bullish as far as we can see here. Okay, everything depends on the May high so far at $76.07. Over in precious metal, we see prices did pull back, although this rebound did not quite get into the target range of $1,986 to $1,994, but the highest it went to was close enough at 1,985.3, and the market since has been pulling back, possibly forming a potential what we call it, triple bottom here. The low here is 1,952, then we have 1,959, I believe. Sorry, 1,954, and then right now we have another challenge at 1,955. So taken into all into consideration, this triple bottom here may actually be a base for the market to rally back into this bracket of prices. For those who are long, maybe you want to get out here for the time being at 1,986 to 1,994, because there is the possibility market may unravel and go back below the April low based on the momentum that we see so far. And this is quite evident when we look at the silver market. The silver basically has not rebounded, and it is already challenging the March low at $22.82. So at the current rate that of its decline, the market looks pretty weak right now, and it may actually go below the March low. So do watch out for the possibility here. Over time, you can see that the dollar strength has also been the reason behind the weakness in precious metal prices, and dollar looks to be pretty strong for now. The high traded this morning is 103.99 in the dollar index, and it looks like it's very close my target of 104.09. 05, sorry. Okay, so upside here is very close to my target range. No point chasing this market ever higher. There's a risk that the market may actually pull back a little bit in a technical correction. So that laid the groundwork for the other currencies to also react. When the dollar is strong, the other principal currency obviously will not be able to bounce. And so far, we can see euro dollar has traded to the low below the April low. Now it's currently trading at 107.35. thereabout. And if we get a rebound, at most you can expect it's back to 108.30 to 108.80 levels. Previously, I was still thinking that maybe the market can bounce back to 109. Now it looks like that is becoming increasingly not likely to be the case. Over in the sterling, we also see the market came off to test the April low, which is currently at 122.75. The low so far this morning is at 123.32. Okay, so leaving very little for us to chase. So if you can afford not to chase this market, do not chase at this current low price, although there is the possibility market might extend a bit lower. However, if you are thinking of holding on to your shorts, so just remember the April low could be a target area, and if we do get a rebound, at the most we can expect is 124 to 124.65 levels. Okay, but I think the potential is quite good in terms of the long-term viability of going short in the principal currency. Aussie dollars has broken below the March low, and you can see that the market right now is trading at 65 cents. Now, if you look at the higher time frame, when we look at the daily time frame, it will give you a perspective as how far more you can fall. Okay, the market started falling from a high of 71 0.7160 all the way down to this morning low at 0.65, and at the rate it is going, it is not necessarily an impossibility for the market to actually go down below the year low, and it could, for all we know, challenge the last November low, which is currently at 0.6385 levels. Okay, so this is at least the immediate target, but overall I think this pullback in a three-wave equality decline may target somewhere between 0.61 to 0.62. Okay, so technically I think that the possibility remains very, very real. And when you look back to the left, you can see that last year the market low here is 0.6170, so it is within this bracket of prices. So the market continued to drop towards 0.61 to 0.62 is a real possibility. We are looking at least 400 pips, or perhaps even 500 pips potential over here. Okay, over in dollar Canadian, we can see the Canadian is basically going sideways. Let's take a look at the 4 hours. The 4 hours suggests the prices is actually very near a potential top here. This market has unfolded in a three-wave rally from the low of 133.15, and the current high so far this morning is 136.13, not far from the March high, which is currently at 136.40, and also not far from the April high at 136.70 levels. Taking all this into consideration, if the market do punch through these levels and trade into 136.60 to 137.20, that will be an area that will put this currency pair very vulnerable to selling interest. Okay, dollar yen has still been charging, and I think the market now is gunning for 140. The high traded this morning is 139.70, not that far away from the last December high at 139.90. Okay, so this level is just possibly not going to be a major issue. I think the market is probably going to gun for 140.60 to 142.30 levels. So within this almost 180 pips range, the market may actually find a top here. So be careful about chasing this market from current levels. Okay, over in Bitcoin, we saw the market actually went below $27,000 for the first time this month. Okay, and the lowest traded this month so far is $25,800. This morning we have a test of this level at $25,878, and we saw a bit of a rebound. And this region where the low is marginally lower than my target range of $25,880 to $26,186. So we have a bit of a breach here, but we can see market quickly pull back up. Okay, so that laid the foundation for a double bottom here. So if the market can actually hold above $25,800, there's a possibility it may actually rally back to 28,000, somewhere between 28,240 to $28,700. So that is a minimum requirement here. So let's see what happens. Is looking to be very, very deliciously favorable to go long here, because upside potential is so huge, whereas the risk can be contained below $25,800. So there you have it. This is my 2 cents worth, and I wish you the best of luck, and I'll see you tomorrow. Bye bye. Take care.